Virgin Australia could return to the ASX as Bain Capital seeks advice on relisting the airline. The US private equity operator acquired the airline out of administration in 2020 at the start of the COVID pandemic. This is an interesting one. Joining us live, Chief Investment Officer at the Motley, Scott Phillips. Scott, so what do you make of this, and any idea what price it could list at?
Pete, good morning. Look, let's do the last question first. We don't know for sure, but it's worth noting that Qantas's share price is up 45% over the past 6 months. So if you're Bain Capital, if you own an airline and you'd like to get listed at some point, you're looking at Rex up 20%, Qantas up 45%, saying, hey, now might be the time. They bought it for $3.5 billion out of administration, as you've already mentioned, mate. You would assume it'll list for somewhere north of that. I haven't seen any numbers just yet. And Bain will be testing the water to see how strong investor appetite is. On one hand, we've seen the strong Qantas and Rex stories. On the other, you've got bonds are relisting, or sorry, not relisting, bonds are coming to the market at the same time as Virgin is talking about relisting. So how much investor appetite will be there for it? Interestingly enough, Virgin is also saying they're going to deliver a profit this financial year for the first time in quite a few years. And so again, if you kind of look at that and say, if you're a seller, that's probably a very, very good time to at least consider, to at least test the waters and see what you might be able to get for Virgin if you do refloat it.
Well, I mean, there's a bunch of airlines in the United States as well. The AFR goes through them this morning too, Scott, that have done quite well. I mean, even some of the lesser known airlines are doing well. I mean, given your experience, do you like the look of it?
Mate, generally not, but so this has been a terrible industry for 50 years because there has always been way too much capacity relative to the profitability of those airlines, which has been great for us consumers, right? We only get cheap flights pretty much anywhere you want to go. So that's why it's been a tough industry thus far. There is some sense, mate, if you're a true believer or you're waiting to see something change, there is some sense the world's airlines are a little more rational these days. Even Qantas and Virgin, albeit non-listed at the moment, in the last 6 months, they haven't dropped prices to compete for seat capacity. They simply said, hey, let's restrict supply. There's no collusion, no cartel. But individually, they've said, look, let's not add seats. Why would you do that? Let's make sure the planes are really, really full. Let's make sure we maximise the profit per seat mile. And the world's airlines seem to be doing something similar. If they continue to be rational, then there is some good money to be made in airlines. History suggests that rationality doesn't last for very long.
Sorry, Scott. Yeah, I mean, there's also the frequent flyer velocity programs, there's credit programs. It's not just not just an airline these days. It's a bigger business.
Yeah, you got it. And in fact, Qantas's frequent flyer business, again, we can only speak about that as a listed business, but the profit from that has been phenomenal for years. It is the most sustainable part of their business. It is the least cyclical. And of course, as you mentioned, it doesn't have that seat capacity issue. It's simply a matter of, hey, we can get people to join this program. We love our frequent flyer points. It is a remarkable profit centre for both big airlines.
Okay. So this, I'm sorry, I'm just staying on this Virgin here for now. When do you expect that to happen? And would this be the biggest listing of the year, or the one with the most attention?
Yeah, very likely to be both, Pete. Again, we don't know what else might come to the market, but this would very, very likely be the biggest one of 2023. Yeah. If it does happen, probably second half of the year, maybe October-ish, about that time frame. Now, we don't know for sure what Bain might do, but it just takes that long to get up and running and then be able to put something into the market. Yep,
sure. Okay, interesting one. Thanks, Scott. Meanwhile, shoppers are embarking on a great revenge spend. What are Australians spending money on at the moment?
Everything, absolutely everything. We saw retail sales up over Christmas by 7.5%. But the first big retailer to come out with numbers in the earnings update season, the guidance season, was Super Retail. Now, these guys own Supercheap Auto, Rebel, BCF, Macpac. They're expecting sales to be up 15% for their first half. So not only was Christmas good, they had a great Black Friday, Cyber Monday sale. And that revenge spending idea is very much seems to be alive and well, despite rising inflation, despite rising interest rates. It seems like the couple of years of COVID restrictions of one sort or another really have said, you know what, we're going to go out and spend. We're going to go out and have a good time, really kind of give the plastic a workout. Now, we've got to be a little bit careful here because we don't know how long this can last. Maybe it's the last hurrah before the new year where we pull our belts in, or maybe we're going to keep spending. But yeah, it's been a really big spending season. A lot of retailers, I think, over the next couple of weeks will come out with updated guidance. And I think more often than not, and with very few exceptions, we'll see very strong retail sales right across the listed retail sector.
Okay, Scott Phillips, the Chief Investment Officer at the Motley. Appreciate it always. Scott, we'll talk to you next week.
Thanks, Pete.